Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the Precious Metals and Critical Minerals Conference. Our next presentation is from Highland Copper. Please note you may submit questions for the presenter throughout the presentation, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting button. At this point, I'm very pleased to welcome Barry O'Shea. He's the Chief Executive Officer of Highland Copper Company, which trades in the OTCQB venture market under the symbol HDRSF and on the TSXV under the symbol HI. Welcome back, Barry.
Thanks, John. It's nice to be here. And I'd say it's a really good time and place for U.S. domestic copper developers. There are really significant tailwinds, in terms of critical mineral strategy for the U.S. And I think the read through for that is federal funding that's available for projects like ours. The U.S. certainly needs to build mines here and now. So today I'm hoping to demonstrate a number of things for you. Certainly that we're setting up our asset well. We have 3.7 billion pounds of copper permitted in the U.S. So I think you can understand there's some real intrinsic value. Our goal now is to ensure that we get our site work, our engineering, and our financing ready such that we can make a construction decision in 2026, ideally break ground in 2027, and be in a position to be producing copper in the 2029-2030 time range. So fantastic timing from that perspective. We're also setting up the corporate structure of our company well. I'll walk you through a divestment of a non-core asset that we recently made. And that's to clean up our capital structure and really focus 100% on our fully permitted copper project in the Upper Peninsula of Michigan. And the last piece that I'll try and help you understand is some really good work that we've done from a technical trading perspective. We eliminated some overhang in late 2025, and we can see the benefits of that in early 2026, some increased trading volumes, institutions coming in on the open market, and broadly speaking, very nice movement from a share price perspective. But let me start with the asset. The Copperwood project, I characterize it as one of the most advanced U.S. copper developers. And so that means that we have all of our permits in hand. I can't understate the value of that. Having permits in hand, of course, puts you in control of your own timeline. We've completed our feasibility study with a reputable firm, G Mining. And beyond that, we've actually initiated early site work. I'll give you a view of that. And we've also awarded all of our detailed engineering contracts. So these are all of the pieces of work that are tangible, that make us a viable project to make a construction decision here in 2026. Very excited about our prospects as we step through this year. And we're doing it at the right time, with, as I say, significant tailwinds in the US. I mean, every day you're seeing new news around support that the US government is providing developers. Importantly, in late 2025, copper was made a critical mineral. And the relevance to that was the scale of capital and expanded federal capital available from the Department of Energy, Department of Defense. And I'll demonstrate for you that we've actually done some very good work at the US Exim Bank. We've secured a letter of interest for $250 million in project financing that represents 60% of the capital that we need. And there's other news. Ongoing Project Vault was announced in recent days. And interestingly, one of our larger shareholders has also set up a co-invested fund alongside the US government to prioritize near-dated copper projects. And that's relevant. You might have heard that statistic that in the US, it takes the best part of 15 to 20 years from first drill hole to production. That's a real statistic. Candidly, we actually haven't bucked that trend. We just happen to be at about year 15 or 16, stepping into a construction decision here in the near term. I wanted to talk about structure first and foremost. When you are a smaller cap company, you have to have your capital structure in place so that you're credible to take on debt as you step forward and certainly step into the debt financing process. We made the decision in November to divest of a non-core, non-controlling interest in the White Pine project, a nice project, but it's a little longer dated. And of course, it's a larger CapEx. We divested it for $30 million. And in doing so, we've eliminated all of our debt. And you'll see on the other side of the transaction from a pro forma basis, expect to have about $25 million in cash. And importantly, a singular focus on our Copperwood project. No question about capital allocation, only how we put our capital towards Copperwood. in terms of driving it to a near-term construction decision. Feel very good about that decision. Candidly, we do need that still to close here in the coming weeks, but it sets our company up well. And I think it's moves like this that have demonstrated the viability of our company to focus and, of course, drive our Copperwood project forward. And Copperwood is the prize for us. As I mentioned, it's our 100% owned, fully permitted copper project. I mentioned we've also initiated some early site works. To be clear, we have not made a formal construction decision, but we want to get the asset ready. That's a picture of some work that we're doing in and around setting up the stream diversion structure in the future to create a clean and dry area to build, ideally in 2027, and also some nice concurrent reclamation, staying very well tied to the stringent environment regulation in Michigan, ensuring that we remain very welcome in this beautiful region. And here's just a picture of Copperwood at a glance. I mentioned work has been done on this project for the best part of 15 to 20 years, and that means it's well understood from a geology perspective, from a processing perspective, and of course from a mining method perspective. And what it gives rise to in terms of our feasibility study is an 11-year mine life producing 70 million pounds of copper annually, a meaningful dent into the US deficit, and a project that is increasingly important from a strategic perspective in the US. A development capex in and around the 400 million range. I think that's an important scale to understand. Naturally, you can see that for a company of our scale, building a 1 billion plus project would be challenging. We think this is a scale that is appropriate, particularly with the financing tailwinds that we're seeing in the US. And a cash cost of just under $2. Spot today is sitting at $6, and I'll demonstrate for you in a few slides, just what that leverage looks like to us and what it means from an investment perspective. Again, I think that's quite relevant. Permits. We have all 7 state permits needed to both construct and operate in the state of Michigan. Importantly, we operate on private land. What that means is that we have no federal nexus and no need for a broader federal environmental process. I'd also say that we've done some very good environmental work locally in terms of constructing, mitigating wetlands, setting up wetland preservation areas, and that work has given us real credibility with the Michigan Permitting Authority and the local community. And candidly, of course, we have our permits, but having license to operate and to being welcome in the region naturally remains important. I want to talk about the scale of this asset. Sometimes Copperwood is called relatively small. I might argue that point. As I mentioned, there are 3.7 billion pounds defined across all categories. And I think I want to point out one important distinction. When you create your feasibility study, and as I mentioned, we have an initial 11-year mine life, you can only use the most, we use your measured and indicated, and that's that 54 million tons. Broadly speaking, the red and green areas on the map here. That's what gives rise to the initial 11-year mine life. But there is an additional 79 million inferred tons that over time we believe can be drilled and converted into mine life. Candidly, we see this project as a 15 to 20-year mine life in the region. So having the real intrinsic value in the asset, as I mentioned, the goal now is to demonstrate that we as a company can both construct and operate. And it starts with design and early site work. As I mentioned, we put about $15 million into the ground. There's a number of real byproducts to that. Of course, we've established credibility in the region. We're working with local contractors, local unions. We're putting our team in place. And that's setting us up also to move towards our engineering. In early 2025, we awarded all key contracts from a detailed engineering perspective. I want to speak to the relevance of that. Of course, having a feasibility study is fantastic, but you do need to step through your full detailed engineering so that you have a view of the current capital and operating costs. You've concluded on all of your design criteria and, of course, advanced that engineering. Again, the relevance there is that as we step into our project financing in 2026, you have sufficient information to defend yourself in a project diligence and step through that debt financing, which in turn leads to the equity financing. As I say, often what leaves companies like Highland Copper, smaller cap companies, discounted to our net asset value is if an investor does not have, let's say, belief in the capacity of the company to both construct and operate. I certainly believe that the early work that we've done at site and the work that we're doing alongside our engineers, putting our money where our mouth is, certainly make us a credible builder of this project. And when you engineer, of course, you want to advance the scale of engineering, but really importantly, you want to improve the project. We made a fantastic announcement in Q3 of last year where we redesigned the process flow sheet. We incorporated ultrafine flotation technology, and we improved the copper recoveries of the project relative to the feasibility study by nearly 2 percentage points. We scaled down the size of the plant, reduced the power consumption and reagent consumption. So broadly, a very strong NPV boost to the overall project. And the net present value is great. If you go back 6 to 12 months ago, arguably an investor might have seen Copperwood as something of an option on copper price. Candidly, at that point in time, copper was sitting at, or in some instances over a year ago, below $4 copper price. Now at $4, our project works nicely. You can see there's about 170 million NPV and an 18% IRR. Good economics, but candidly challenging to finance. But what you see is that the returns as you move up from a copper price perspective are non-linear. A 25% increase in copper price to $5, you'll see, gives rise to a 300% increase in net asset value to 507 million. And of course, if you step up $1 again, a $6 copper price, where we sit at from a spot perspective today, the net asset value nearly doubles again to about 850 million and a near 50% IRR. Importantly, those are the scalings of the NPVs relative to the feasibility study. And we do think we have a number of opportunities to improve that, as demonstrated, the 1.6% increase in copper recoveries. We think there are life of mine additions beyond that initial 11 years that aren't included in in the feasibility study. And of course, as we work in the first half of 2026 through federal and state funding opportunities, again, these are all additive. While we do have those great opportunities, of course, I would reflect that as we update our overall capital and operating cost estimates, naturally we will see some inflation related to the feasibility study, and we'll incorporate that into the overall updated economics. And I just want to demonstrate, I'm going to talk about the overhang that we had in late 2025 and how we dealt with that from a trading perspective, because I think there's a lot of things that we did positively in 2025 that we arguably did not get credit for. Some of these other companies, peers, and their wonderful companies, their assets are similar to ours, good scale in good jurisdictions with nice grades. But as you can see, market values well in excess of ours. This is not to say that we've been left behind. I think we just remain a very strong value pick, particularly on the other side of this trading overhang. And we've seen some real great green shoots of movement from both the liquidity and share price perspective in 2026. Sitting at 100 million or just under from a market cap perspective. And of course, looking back to those net asset valuation targets, we think we have some very strong movement here in the near term. And I wanted to talk about some of the corporate development moves. Of course, as I said, dealing with the asset is first and foremost. That's what provides the intrinsic value, driving engineering, site work, and financing. But I also mentioned that we were dealing with some overhang. At the tail end of 2025, it was understood that one of our larger shareholders, Greenstone Resources, they're liquidating their fund broadly. They owned 16% of the company. And naturally, it's challenging for other institutions to buy in when it's known that there will be a larger shareholder divesting in the relatively near term. So we orchestrated a really good block trade where we traded out that 16% to about 6 institutional investors, I will say, for the first time, bringing some real meaningful institutions into the story, of course, eliminating the trading overhang and increasing the broader trading float. We took care of some other strategic sellers, again, from a block trade perspective in late 2026. And as I say, just as we look at our trading in 2025, much more healthy from both the volume and share price perspective. Financing is also key. We need to demonstrate as a smaller cap company that we can fund the 400 million capex. We made a wonderful step again in Q3 of last year, where we received a letter of interest from the US Exim Bank for $250 million in project financing. As I mentioned, 60% of the capital that's needed. And to be clear, it's not the only area that we're focusing on. Both the Department of Energy and Department of Defense have other creative elements of capital available, from debt to grants and also to equity. And we remain in play in DC with our lobbyists in all of these areas. Certainly the first half of the year, we look forward to advancing those opportunities. To be clear, though, we're not solely depending on federal underwriting from a U.S. perspective. As copper moves, as critical mineral move, there's obviously very much a renewed interest of mining, particularly with U.S. investors. There are a whole host of private equities, banks, and off-takers who are interested in providing debt and, as I say, creative forms of capital. So, in the U.S., with the tailwinds that we're seeing, capacity to raise this funding, I think, has increased considerably, and it's going to be a key piece to the valuation of our story. And so that leaves us with a really strong set of investors, or as I said, Orion Mine Finance owns 28% of our company. We were very happy in that block trade in late 2025 that Condair, a natural resources fund out of Texas, increased their stake from 16 to just under 20%, and of course, bringing in some new institutions to the story. One thing that we are going to look to deal with from a structure perspective is the 736 million shares that are outstanding, and we're at about a 14 to 15 cent share price on the OTC. I just don't think that price is quite reflective of the majority of the company. So we're certainly looking to do a 10-to-1 consolidation. And I think that would be a strong move in terms of how we're viewed and, of course, how traders look at our story and step in. So just a couple of slides left here. We achieved a great deal. And as a matter of fact, if you take a look, broadly speaking, it was done in the latter parts of 2025. Interestingly, through that point in time, as we start to see some really nice movement in both copper price, but also in the equities of some of our peer companies. And, we didn't seem to enjoy some of that share price appreciation in the second half. I think that owed in great part to the fact that we had some meaningful overhang. But as I said, when we took care of that block trade, we started to see our shares trade considerably more freely, and we're seeing the benefit of that here in early 2026. And that's why I do characterize, as a starting point, as our story of something of a catch-up trade for the good work that we have done in 2025, and really a strong, intrinsic value pick when I think about what sits inside the company from a value perspective. But of course, we don't rest on our success of 2025. We have some great upcoming catalysts as we think about both state and federal funding through the first half of 2025, naturally advancing our engineering and as we can, improving the project through that process. Parallel the project financing, again, to demonstrate our viability, both from a construction, operability, and financing perspective, with the goal then to make a construction decision at the tail end of 2026. And we put some good news out just a week or two ago that really looks to put some meat on the bones in terms of our 2026 work plan. I won't walk you through these all in detail, but just demonstrating the viability of the story to advance. That's important. Of course, having leverage to changes in copper price, of course, drives asset value of the project. But when you think about the price to net asset value discounts that very often developers experience, it is demonstrating capacity to engineer, finance, demonstrate operational readiness that really allows those discounts to move more so towards the true intrinsic asset value of the project. So it puts us in a very exciting position. I think at the right time in the U.S., this particular administration is firmly focused on bringing critical mineral projects in the near term to fruition. Very important for the U.S. So with that, I'm going to pause for a moment. I'm just going to take a quick look and see if there are any questions. And interesting that there are one or two, I think, that recur quite continually. And then the first is, when do we expect the White Pine transaction to close? We actually signed a definitive agreement there just in January, so quite recently. That demonstrated that the outside close date was the end of February. So that remains our target. Obviously, we'd like to get it done sooner rather than later, but that's the point at which we expect the transaction to close. Real relevance there just to the structure of the company, the financial strength of the company. And, one thing I guess I wanted to demonstrate, not only will we eliminate debt, but it provides us about 25 million in total capital. There's strategic value to those proceeds in that it fully funds us to a construction decision, and of course, put that timeline well in our hands. One more question, just looking for a little more color on the Greenstone block trade. An excellent trade from our perspective. And I guess what I can reflect is that the two lead buyers, actually, one was Mackenzie, a very strong financial institution in Canada, who now own approximately 4% of Highland Copper. And as I mentioned, just a really nice endorsement from a current shareholder, also buying an additional 4%, stepping from 16 to 20. That's Condir. Feel very good about that trade. And as I said, it's opened up our trading as we look into 2026, and it was nice actually to see for the first time in January a new institution entering on the open market and having the liquidity to do so. So we feel very comfortable there as well. So I'm going to conclude there. Please note that you can book a meeting with us. We'd be very happy to meet and put you in front of both our CFO and our project director. Again, just to demonstrate the internal management strength inside the company, and of course, what our plan is to drive the story through 2026. Thank you very much for attending, and look forward to meeting with any of you in the future.